Mutual fund history. The first introduction of a mutual fund in India occurred in 1963, when the Government of India launched Unit Trust of India, UTI. UTI enjoyed a monopoly in the Indian mutual fund market until 1987, when a host of other government-controlled Indian financial companies established their own funds, including State Bank of India, Canara Bank, and Punjab National Bank. This market was made open to private players in 1993, as a result of the historic constitutional amendments brought forward by the then Congress-led government under the existing regime of liberalization, privatization and globalization, LPG. The first private sector fund to operate in India was Kothari Pioneer, which later merged with Franklin Templeton. In 1996, SEBI, the regulator of mutual funds in India, formulated the Mutual Funds Regulation, which is a comprehensive regulatory framework. Mutual funds are an under-tapped market in India. Deposit being available in the market. Less than 10% of Indian households have invested in mutual funds. A recent report on mutual fund investments in India published by research and analytics firm, Boston Analytics, suggests investors are holding back from putting their money into mutual funds due to their perceived high risk and a lack of information on how mutual funds work. There are 46 mutual funds as of June 2013. The primary reason for not investing appears to be correlated with city size. Among respondents with a high savings rate, close to 40% of those who live in metros and Tier I cities considered such investments to be very risky, whereas 33% of those in Tier II cities said they did not know how or where to invest in such assets. Distribution. Mutual fund investments are sourced both from institutions, companies, and individuals. Since January 2013, institutional investors have moved to investing directly with the mutual funds, since doing so saves on the expense ratio incurred. Individual investors are, however, served mostly by investment advisor and banks. Since 2009, online platforms for investing in mutual funds have also evolved. Servicing. Larger Indian mutual fund industry has benefited from outsourcing the activity of servicing their investors to two of the leading registrar and transfer agents, RTAs, in India, namely CAMS and Carvey. While CAMS commands close to 65% of the assets servicing, rest is with Carvey. Franklin Templeton Mutual Fund services its investors through its own in-house RTA setup. Both the RTAs have vibrant network of their local offices which enable the mutual fund investors to transact locally. These touchpoints, or customer service centers, CSCs, provide a wide range of servicing including financial transaction acceptance and processing, non-financial changes, CAIC fulfillment formalities, nomination registration, transmission of units apart from providing statement of accounts, etc. These two RTAs also provide most of the similar facilities in their respective websites, which are very user-friendly. Average assets under management. Assets under management, AUM, is a financial term denoting the market value of all of the funds being managed by a financial institution, a mutual fund, hedge fund, private equity firm, venture capital firm, or brokerage house, on behalf of its clients, investors, partners, depositors, etc. MF history. The mutual fund industry in India started in 1963 with the formation of Unit Trust of India, at the initiative of the Government of India and Reserve Bank of India. The history of mutual funds in India can be broadly divided into four distinct phases. First phase, 1964 to 1987. Unit Trust of India, UTI, was established in 1963 by an Act of Parliament. It was set up by the Reserve Bank of India and functioned under the regulatory and administrative control of the Reserve Bank of India. In 1978 UTI was delinked from the RBI and the Industrial Development Bank of India, IDBI, took over the regulatory and administrative control in place of RBI. The first scheme launched by UTI was Unit Scheme 1964. At the end of 1988 UTI had Rs. 6,700 crores of assets under management. Second phase, 1987 to 1993, Entry of public sector funds. 1987 marked the entry of non-UTI, public sector mutual funds set up by Public Sector Banks and Life Insurance Corporation of India, LIC, and General Insurance Corporation of India, GIC. SBI Mutual Fund was the first non-UTI mutual fund established in June 1987, followed by Canbank Mutual Fund, December 87, Punjab National Bank Mutual Fund, August 89, Indian Bank Mutual Fund, November 89, Bank of India, June 90, Bank of Baroda Mutual Fund, October 92. LIC established its mutual fund in June 1989 while JIC had set up its mutual fund in December 1990. At the end of 1993, the mutual fund industry had assets under management of Rs. 47,004 crores. Third phase, 1993 to 2003, entry of private sector funds. With the entry of private sector funds in 1993, a new era started in the Indian mutual fund industry, giving the Indian investors a wider choice of fund families. Also, 1993 was the year in which the first mutual fund regulations came into being, under which all mutual funds, except UTI, were to be registered and governed. The erstwhile Kothari Pioneer, now merged with Franklin Templeton, was the first private sector mutual fund registered in July 1993. The 1993 SEBI mutual fund regulations were substituted by a more comprehensive and revised mutual fund regulations in 1996. The industry now functions under the SEBI mutual fund regulations 1996. The number of mutual fund houses went on increasing, with many foreign mutual funds setting up funds in India, and also the industry has witnessed several mergers and acquisitions. As at the end of January 2003, there were 33 mutual funds with total assets of Rs. 1,21,805 crores. The Unit Trust of India with Rs. 44,541 crores of assets under management was way ahead of other mutual funds. Fourth phase, since February 2003. In February 2003, following the repeal of the Unit Trust of India Act 1963, UTI was bifurcated into two separate entities. One is the specified undertaking of the Unit Trust of India with assets under management of Rs. 29,835 crores as at the end of January 2003, representing broadly, the assets of US 64 scheme, assured return and certain other schemes. The specified undertaking of Unit Trust of India, functioning under an administrator and under the rules framed by Government of India and does not come under the purview of the mutual fund regulations. The second is the UTI Mutual Fund, sponsored by SBI, PNB, BOB and LIC. It is registered with SEBI and functions under the mutual fund regulations. With the bifurcation of the erstwhile UTI, which had in March 2000 more than Rs. 76,000 crores of assets under management, and with the setting up of a UTI mutual fund, conforming to the SEBI mutual fund regulations, and with recent mergers taking place among different private sector funds, the mutual fund industry has entered its current phase of consolidation and growth. Top 20 Best Mutual Funds SIP to Invest in India for 2017. Top 4 Large Cap Fund for 2017. Number 1. Birla Sunlife Frontline Equity. Birla Sunlife Frontline Equity Mutual Fund is large cap fund. This fund has given very good performance historically. In last 3 years fund has given 19.7% return to the investor. This fund is managed by an experienced fund manager. The asset size of this fund is 13,000 crore. CRISIL rating is 5. You can invest in Birla SL Frontline Equity Mutual Funds for 2017. Number 2. ICICI Prudence Top 100 Fund. ICICI Prudence Top 100 Fund is second large cap fund recommendation for 2017. The average return of this fund in last 5 years is 17%. This fund has invested in good blue chip stocks. Asset size of this fund is 1,400 crore. This fund is high risk high return fund. CRISIL rating of this fund is 4. Number 3. Kotak Select Focus Fund. Kotak Select Focus Fund is best mutual funds in large cap category. The expense ratio of this fund is very low, 2%. Asset under management is 6,300 crore. Stock holding pattern and EI consistent return are plus points for this fund. This is pure equity fund with 93% holding in the equity market. Number 4. SBI Blue Chip Fund. SBI Blue Chip Fund is next in line of the best mutual fund for 2017. CRISIL rating of this fund is 5. The expense ratio of this fund is very low. AUM of this fund is 8,846 crore. The fund manager of this fund is managed by an experienced fund manager. This fund is one of the oldest funds. Historically this fund has given very good returns. Top 4 large and mid-cap for 2017. Number 5. Franklin India High Growth Companies Fund. Franklin India High Growth Companies Fund is multi-cap fund managed by 3 fund managers. The AUM of this fund is 5,042 crore. CRISIL rating of this fund is 4. This fund has given a return in the range of 20 to 30% at a long run. This fund has made investment largely in banking, automobile, and infrastructure sector. You can invest in this fund for 2017. Number 6. Franklin India Prima Plus Fund. Franklin India Prima Plus Fund is next recommended multi-cap fund. CRISIL rating of this fund is 4. This fund is managing asset worth 9,200 crore. This fund is managed by an experienced fund manager and it is one of the oldest funds in this category. Number 7. UDMNC Fund. UDMNC Fund is next fund in the category of multi-cap fund. CRISIL rating of this fund is 5. This fund has given very good performance in past. It is managed by an experienced fund manager. The asset managed by this fund is Rs. 2,057 crore. Last year performance of this fund was average but it is expected to improve in 2017. Number 8. ICICI Prudence Valued Discovery Fund. ICICI Prudence Valued Discovery Fund is one of the best funds for investment in 2017. This fund has given very good return historically. The asset managed by this fund is R'(S.14979 crore. This fund has invested 92% in equity sector and 8% in debt. Finance, technology, and infrastructure are a major holding of this fund. Top 3 mid and small cap for 2017. Number 9. DSP BlackRock Microcap Fund. DSP BlackRock Microcap Fund is best mid and small cap fund for investment in 2017. The average return of this fund for last 5 years is 30%. Major holding of this fund is chemical, textile, and engineering sector. CRISIL rating of this fund is 5. You can invest in this fund for 2017. Number 10. Franklin India Smaller Companies Fund. Franklin India Smaller Companies Fund is topmost fund under mid and small cap category. This fund has given very good return to the investor in past. The major holding of this fund is in finance, engineering, and chemical sector. You can invest in this fund for the long term. Number 11. SBI Magnum Mid Cap Fund Growth. SBI Magnum Mid Cap Fund is one of the top mid cap funds. CRISIL rating of this fund is 4. The expense ratio of this fund is very low. Finance, healthcare, and engineering are the top sectors where this fund is investing money. This fund has given a very good return in past. Top 3 Balance Fund for 2017. Number 12. HDFC Balance Fund. HDFC Balance Fund is first balance fund recommended for 2017. The asset managed by this fund is Rs. 7,391 crore. The expense ratio of this fund is 1.99%, which is very low. This fund is managed by the experienced fund manager. In past, this fund has given an average return in the range of 15%. Number 13. Birla Sunlife Balance 95 Fund. Birla Sunlife Balance 95 Fund is one of the best performing funds. CRISIL rating of this fund is 5. Finance, automobile, and healthcare are major focus area of this fund. This fund has 70% equity holding and 30% debt holding. Number 14. Franklin India Balance Fund. The next fund under balance category is Franklin India Balance Fund. CRISIL rating of this fund is 4. This fund is managed by an experienced fund manager. A performance history of this fund is very good. This fund has 65% equity holding and 31% debt holding. Top 4 Real SS Fund for 2017. Number 15. Axis Long-Term Equity Fund. Like last year, this year also Axis Long-Term Equity Fund is first ELSS fund for investment. The asset managed by this fund is R'(S.10465 CR). This fund has given very good return historically and beat peers and as well as Nifty 50 index. CRISIL rating of this fund is 4. You can invest in this fund for tax-saving purpose. Number 16. Franklin India Tax Shield Fund. Franklin India Tax Shield Fund is next ELSS fund for investment. The prime focus of this fund is finance, automobile, and technology sector. CRISIL rating of this fund is 4. This fund has historically given very good return to the investor. Number 17. Birla Sunlife Tax Plan. Birla Sunlife Tax Plan is a good fund for tax-saving purpose. The expense ratio of this fund is high, however, this fund has given a very good return in the past. CRISIL rating of this fund is 4. This fund is investing 97% fund in equity sector. Number 18. DSP BlackRock Tax Saver Fund. DSP BlackRock Tax Saver Fund is ELSS for investment in 2017. This fund has given average 20% return to the investor in past 5 years. The asset managed by this fund is R'(S.1435 CR). CRISIL rating of this fund is 4. Top 2 Debt Income Fund for 2017. Number 19. ICICI Prudential Income Plan. ICICI Prudential Income Plan is one of the best funds in debt category. This fund has given consistent 10% return in past 5 years. It is medium risk fund with very low expense ratio 1.8%. Number 20. Birla Sunlife Short-Term Opportunities Fund. The next best fund in debt category is Birla Sunlife Short-Term Opportunities Fund. This fund has also given 10% consistent return in last 5 years. CRISIL rating of this fund is 5. The expense ratio of this fund is very low 1.39%. If you are risk-averse investor, you can invest in this fund. Note: mutual fund investments are subject to market risk. Please read the offer document carefully before investing.